Investing in Asia Pacific fits well into our purpose statement, expert in Asia, invested in your future. We are talking about 11 countries in the MSCI Asia Pacific ex-Japan Index. The number of companies in the region that we can invest is more than double that of Greater China. This means there are more investment ideas to explore and more alphas to be identified. Of course, it is unrealistic to expect a straight line uptrend in equity markets. At times, we see country, region, and even sector rotation within regions. Investing in Asia Pac will give more room for country allocation that will provide a better diversified portfolio in terms of risk management and more opportunities to capitalize on the potential rotational play. And another thing to highlight is that I think we can all agree on China's growth story. There are temporary hiccups due to various lockdowns on the backdrop of COVID-19 resurgence. But the long-term growth prospect is still intact. There are plenty of opportunities from China itself, but don't overlook other countries that are not only benefiting from China's growth, but also the global recovery, although at a slower pace. We also see many investment opportunities from Korea, India, Australia, and Southeast Asia. We expect tech upcycle to continue. Demand for digital transformation is here to stay. Clean energy investment and eyes to EV transition will accelerate because oil supply and price shock from Russia-Ukraine war has raised the importance and urgency of investing in clean energy. Innovation and ensuring security in China's supply chain intact. CapEx will continue and benefit equipment and machinery providers and components and materials suppliers in Asia Pac. It is all about carbon neutrality commitment. Besides the opportunities available in the ESG space, we all should play a critical role in supporting ESG investment to save our world from climate change for our next generation. The global semiconductor industry is a key growth sector in the global economy and has been driving the outperformance of Asia Pac equities in recent years. A push by the Federal Reserve to raise interest rates and combat high inflation, supply chain shortages, and ongoing global health crisis, and the geopolitical earthquake caused by the Russia-Ukraine war, which is also threatening to create a world food crisis, have rocked the global market. The most challenging financial event for investors in the coming decade will be the repricing of securities to valuations that imply adequate long-term returns. However, the silver lining is that value has emerged after this round of sell-down. Asia Pacific equity represented by MSCI Asia Pac ex-Japan Index is trading at one standard deviation below 5-year mean, and it is very cheap compared to the Western counterparts. Dollar strength is expected to continue in the near term. As the Fed starts to hike rate, Asia Pac markets are well supported by external dynamics with a structural growth story. Weak currency can give good entry points to attract foreign inflows. Ignore noises and focus on fundamentals of individual stocks. Identify possibilities and look for opportunities. Economic and border reopening is real, and we see pent-up demand. Recovery team is still intact. Although there could be temporary hiccups for longer-term investment, we continue to stay invested in tech, especially in the space of EV and selective names benefiting from the structural uptrend driven by the demand for data center, 5G technology upgrade, and IoT. Investing in Asia-Pac markets is for higher growth, attractive valuation, and for risk diversification. The IMF has slashed its growth projections for 2022 with every major economy across America, Europe, and Asia set to suffer slower economic growth till 2024. The global economy is slowly recovering from the pandemic. However, the positive growth trajectory was disrupted due to Russia-Ukraine crisis. Factors including inflation, supply chain disruptions, fuel prices, and the impact of new COVID variants could further decelerate the growth in Asia, Europe, and the Americas over the next few years, according to the IMF. However, we see a split in the regional performance, with the IMF's downgrades. Asia regional, especially China, India, and ASEAN 5 stand out with relative higher economic growth as compared to the Western ones. We continue to see ongoing long-term structural economic growth across Asia and a diverse corporate sector, which offers us many investment opportunities when taking a long-term investment approach. Our investment team focus on digital transformation, 5G upgrades, EV upcycle, COVID-19 recovery, trade diversion from China into Southeast Asia, technology localization in China, healthcare, consumption upgrades, new retail, and clean energy. China was the only country in the world which delivered impressive GDP growth during the pandemic outbreak in 2021, while others suffered economic contraction. Although there are rising COVID-19 cases in Shanghai, in Beijing lately, they have caused lockdowns and global supply disruption. The outbreak has been successfully contained and the disruption has eased. So, we think that the disruption is temporary. Also, while the US has aggressively rolled out QE to support economic activities during pandemic, which has caused its balance sheet to balloon from about 5 trillion to over 9 trillion US dollar. China has shown control in terms of its monetary policy. During a recent panel discussion hosted by CNBC, IMF Director Kristalina Georgieva considered that central banks globally printed too much money and didn't think of unintended consequences. US is entering into a rising interest rate cycle, while China is going the opposite direction to boost their economy. Therefore, Asia Pacific ex-Japan will benefit from the growth in China. With the world opening up together, Asia is getting ready to benefit from tourist arrival if 2019 trends are assumed. We are just at the beginning of the reopening. We believe the recovery theme will continue through 2024. When China is well prepared, they will eventually open up, and that will be a big bonus to the global economy, especially Asia Pacific.